We're joined by the chief economist from Lloyds TSB Corporate Markets, Trevor Williams. Trevor, good to see you this morning.
Sure.
The asset sales that we heard from Greece yesterday, I suppose with so much fiscal tightening, with Greece still in recession, it's just about all they can do to show willing to get that next bit of EU support.
Well, it's one of the things that they've been asked to do. Unfortunately, they were asked to do this before, they promised to do it, and they haven't done it. So they're promising once again to do it. So the question is, given the opposition that there is increasingly in Greece to the cuts, whether or not the government can actually push them through.
Trevor, is Greece going to be able to avoid default? I mean, John Lipsky saying as long as they follow the program, as long as they implement it, it will work. Do you agree with that?
No. Ultimately, I'm afraid Greece doesn't grow fast enough to generate the tax revenues to meet the interest payments on the debt that it's accumulating. Lending them money, more money, won't solve it. There has to be some restructuring. It doesn't have to be an outright default. It depends on how you define default. But there has to be some restructuring of Greek debt.
Well, how do you define default? Because you've got the ratings agencies saying that any sort of reprofiling is a default. If it looks like a default,
spawned
it's a
a
default.
whole new vocabulary.
Then there will be a default. And I actually think in the long run it'd be good news for Greece and for everyone concerned if there was to be a recognition that they cannot pay it back. Not just them, a couple of others may not be able to either. But I think that the quicker it's done, the quicker a proper mechanism is put in place to do that, then the better for all
Dancing
concerned.
the boil.
Indeed.
But if you do that, you risk this contagion. I mean, you had Neil Ferguson telling us that, this crisis is morphing away from just about Greece, just about Ireland. It's a crisis of confidence in the whole of the European Monetary Union. That's what we're talking about here.
Well, I disagree with that. I think it's a problem about the debts of a number of relatively small economies that are in the Eurozone system, that are unable to meet their commitments, have been helped by their colleagues and by the countries that are in the monetary union with them, but they still can't meet those payments unless some of that debt is written off. And that will actually rescue any pressure on the euro, and it will reduce contagion effects because they'd have been seen to have contained this issue. I think leaving it is allowing it to spiral out of control because there's no sense that something is being done which will lead to a resolution of what is the underlying problem.
But the background of this is declining economic confidence, not just throughout Europe, but in China, but in the United States.
Well, again, I think the world economy is actually quite healthy. And I think if you are going to do these kind of reforms, this is the time to do it. The world economy grew quite rapidly in the first part of this year. There's some slowdown occurring in the second part of the year, partly as a result of the strong rise in oil prices that took place towards the back end of 2010 and in the beginning of this year. As oil prices are coming off, growth will reaccelerate. The pace of global growth is healthy. In fact, it was leading to too much inflation in some countries, and so policy had been tightened. And that's not a sign of weakness, it's a sign of strength, particularly if the proper policy action has been taken. So actually I disagree. I think it's a great time to be able to look at what the underlying problems are facing these economies and deal with it now whilst there's strong growth. I mean, look at the pace of growth in Germany, for example, over 1% in the first quarter of this year.
It sounds like what you're saying, Trevor, is that out of all of this, the European Union is going to emerge stronger, but that's a really optimistic view. I mean, you're just talking about European leaders that can't get their act together here.
Well, that's a different thing. I think the Eurozone economy as a whole is actually recovering quite strongly, driven by the largest of those economies, Germany. But that does not mean that the politicians have got their act together just yet. They haven't. It's not just the politicians. There isn't an acceptance at the ECB either about what needs to be done. And that's what's actually required. Amongst those that run the Eurozone, there has to be a willingness to take tough action to deal with the crisis that's affecting those three countries in particular, Greece, Portugal and Ireland.